Now, of course, because SCHD ETF does track the Dow Jones US Dividend 100 Index, I think it's important to take a look into the methodology and see exactly how this works, how stocks are added or maybe not added. And to be honest, for anyone holding onto SCHD, I think it's very important to know some of these facts if you are going to hold on to this ETF long term. So the methodology says Dow Jones US Dividend 100 Index Universe. The index universe is defined as the constituents of the Dow Jones US Broad Stock Market Index, excluding REITs. So even though REITs are great, I'm a huge fan of REITs, they are not going to be included into this index. It then says stocks must pass the following screens: minimum 10 consecutive years of dividend payments, minimum FMC of US 500 million, minimum 3-month abbvie of $2 million US. Stocks passing all three screens are ranked in descending order by IAD yield, defined as the stock's IAD, not including any special dividends, divided by its price. The top half of securities based on its rankings are eligible for stock selection. The reference date for dividend payments history is the last business day of December, while FMC and abbvie are as of the last business day of February. Now, the index construction, also very important. Constituent selection is as follows. The eligible securities are ranked by each of 4 fundamental base characteristics. Things like free cash flow to total debt, annual net cash flow from operating activities divided by total debt. Companies with 0 total debt are ranked first. Then return on equity, annual net income divided by total shareholder equity. Then IAD yield, and then 5-year dividend growth rate, defined as this equation below. It then says the 4 rankings are equal weighted to create a composite score, and the eligible securities are ranked based on the composite score. The top 100 ranked stocks by the composite scores are selected to the index, subject to the following buffer rules that favor current constituents during the annual review, which are the constituent stocks will remain in the index as long as they are among the top 200 rankings by the composite scores. So even if a stock doesn't rank as high, as long as it's already in the index, it could still stay. Non-constituent stocks are added to the index based on their rankings until the constituent count reaches 100. If 2 non-constituents have the same composite score, the non-constituent with the higher dividend yield will be selected. And then as far as the weighting goes, it's pretty simple. It says stocks in the index are weighted quarterly, based on a capped FMC weighted approach. No single stock can represent more than 4% of the index, and no single global industry classification standard sector can represent more than 25% of the index, as measured at the time of index construction, annual rebalancing, and quarterly updates. So once again, I repeat, for anyone out there that's holding onto SCHD, to understand how the formation and some of the rules of the index that SCHD tracks is very, very important to be aware of. But I want to hear what you guys think down below when it comes to the Schwab US Dividend Equity ETF. Are you currently buying more shares of SCHD as of now, or have you lost all hope when it comes to this popular dividend growth ETF? If you enjoyed this video, make sure to please drop a like down below and subscribe for more content like this in the future. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.